Hello, in this video I'm going to show you how you can take advantage of Surge Flux and do some scalp trading with the use of EMAs, Bollinger Bands, and of course Surge Flux B momentum waves. So for that strategy, as I mentioned before in the previous video where I talked about the EMA strategy, the previous strategy was to catch those long waves up and down in the bull market or in the bear market. Here is more of a scalp trade. So with this strategy, you won't be able to catch those long waves of upward momentum. It's just a quick in and out. So this is particularly useful when the market is moving sideways. And you can kind of already see what I mean. If you put the Bollinger Bands on, you can clearly see how the price is moving from the upper band to the lower band. But actually there is some more elements to it if you want to enter and exit and be profitable with your trading. So these sideways actions, you can spot them during the bull market when there is a bearish divergence on the higher time frame. So what I mean by that is, for example, if you go to a daily time frame, you can see that for example right here we have some bearish divergences both on momentum waves and on the RSI, and that usually indicates that the market is either going to go down or go sideways. Now in the bear market, a bearish divergence like that would mean obviously a downward momentum. But in the bullish market, in the bull market, it usually means sideways action or slightly downward action. So here is a perfect example of a sideways action, and if we go back to our 30-minute time frame, we can look for some trades using this strategy. Now let me find the right moment. Okay, so this is okay, so let's start looking somewhere from here. So for this strategy, you need to turn on in your Surge Flux A indicator the Bollinger Bands, the EMAs, and that's about it. And then, of course, we will be looking at momentum waves on Surge Flux B. So here we will discuss only long setups. You can actually reverse this strategy and do also shorting, but I'm going to discuss only the long entries. So first of all, what you're looking for in a long entry is that the EMAs have to be in the bullish alignment. So the yellow one, the 20, must be above the red one, which is 55, and then the 55 must be above the 100, which is the green one. So if you have that, and the price comes down to the lower Bollinger Band, then we are on the 30-minute time frame, and we're looking for a green buy signal on printing on the candle. And the candle also has to be near the lower Bollinger Band. For sure, it has to be below the midline of the Bollinger Band, because you have the upper line here, the lower line, which is green, and then the midline, which is blue. So when we have a candle here and a bullish buy circle printing, this is the entry. Okay, so you enter on this candle, and then you basically exit once the price hits the upper Bollinger Band, or once it comes close to it. So this would be the close. On this candle we would close our trade. So this would be, depending on where you enter on this candle, approximately about 2.5% trade. With 10 times leverage, that's 25% trade. So let's have a look at another example. We have the next, oh yeah, and one other thing is that if you're looking for the buy signal on the momentum wave, preferably it should be the one closer to the oversold area, which is minus 60 line. So this is a good example. This is a good example. Now these ones, they print a little bit higher, so they are more risky. So we are preferably looking for the buy signals that are as low as possible. So if we take a look at this one, what do we have here? We still have the bullish alignment, so we still have the EMAs in the right formation. We have the momentum wave, which is the buy signal is printing below the 60 line, which is really good, very low. And then the candle is below the midline and close to the lower Bollinger Band. So then again, we enter the trade here, and then we will exit the trade here or here. Okay, so the price touches, and then we are out. Of course, we will miss this, but then again, a price could just as well go down, and then we would be stopped out. Okay, so this would be a scalp trade of about 2%, which again, 10 times leverage, 20%, right? Not too bad. So yeah, so when it comes to a stop loss, I mean the stop loss, depending on your risk management, would always go below the wick. So in that case here, and right there, right? All right, let's have a look at the next possible trade. So we come down here. Now this one I would ignore because for starters, we are quite far from the lower Bollinger Band here, although the EMAs are still in a bullish alignment, and also this prints a little bit higher than we want to see it. So we would like to see this the momentum wave come further down. So let's move on to these two here. So with this one, for example, let's have a look. We don't have the bullish alignment here because we have the crossover. So the 20 goes below the 55, so that's a no trade. So then we have that one, that bullish signal printing here, and let's have a look here. We still have the bearish alignment. The EMA is still below even the 100 here, so this is a no trade zone. So then we come up here, we have the bullish crossover again, but then the waves are right, in the upward section of the Surge Flux B. So we have to go and look for another entry. So let's take a look here. So here we have all the EMAs aligned bullishly. We have the price below the lower Bollinger Band, and we have the first signal is printing here, so that if you set up your stop loss, if you entered here and you set up your stop loss here, you will be stopped out because the price comes lower. Now, depending on your risk management, if you have a lower stop loss, you will be still profitable in this trade. But let's say we get stopped out and then the price comes lower, we're still in a bullish alignment, and here we have a buy signal printing even lower than before. So we enter again here, and then we can exit once we get closer to the top. Otherwise, we would get stopped out again here. In this case here on this signal, you can see that this is a nicely profitable trade. Although here we have the bearish crossover, so it would be a bit more risky to trade that. So for me, that would be no trade. Let's have a look. Bearish, bearish, bearish. Right there we have a crossover up and up, and then the price comes down nicely here. The EMAs are still bullishly aligned. We enter right there, okay, on the bottom of the Bollinger Band, and then we exit beautifully here in the upper upper parts, close to the upper Bollinger Band here. So that trade would have been about 3.5, so 35%. Then we have these two signals we disregard because they print too high and they are not near the lower Bollinger Band. So we look further. This one would be risky because it's not near the lower Bollinger Band. It's closer to the midline, I would say. So this could be more risky but profitable in this case. And then the market is going upwards, right? So in this case, we would use the strategy that I discussed before, the 3 EMA strategy to enter this trade. So let's have a look at some more examples when the market starts to go sideways. So then again, we have those bearish divergences and we are simply going sideways. So here we have the bullish alignment, we have the nice buy signal at the bottom of the oversold area. So we enter here and then we exit right there, okay? So this trade around 2%. Next, again, low entry here, the buy signal printing in the oversold area, but we have the bearish crossover here, so that would be no trade for me, but still profitable, right? Because we could enter and exit right there. But here, if it's compressed like this, it's very risky to take a trade. But still, if you entered here, for example, on this dot, and you would exit right there, right? But it's because it's so compressed, it doesn't make it that profitable. Of course, it depends on how much leverage and how much money you're using. And then we have the drop, and then we're going up, and then it's just it's downwards, and then it's a little bit sideways here, so we can analyze this bit. So let's have a look here. We have a number of buy signals, but the lowest one, so we are always looking for the one that is near the -60 line, near the oversold area. So if we entered here, you can see that the EMAs are still in the bullish alignment. We exit right there. And again, we are profitable. Now, this strategy will of course work also from, if you reverse it, but then of course you would have to look for the bearish alignment. So you go short only when you have the Bollinger Band, you have the EMAs flipped, basically. But to tell you the truth, the longs work much better than shorts with this strategy. So I would stick, to be profitable, all you need to stick to is the strategy I discussed before with the EMAs and the divergences, and pretty much this scalping strategy. So ideally, what you want to do is you want to have 2 accounts on 2 different exchanges, and you can use the links below to set up an account on Bybit or Maxi, or if you want to trade without KYC, you can go to Blowfin, and have just deposits like, depending on your risk, whatever money you want on one and the other account, like $200, $500 each account. And then you can use one account for those longer trades where you're trading with the 3 EMA strategy, and then you can use the other account basically to do the scalping. And then in time you can look, you know, which account is more profitable and which strategy is working better for you. So there you go. That's it. You can get Surge Flux. There is a link below to the website. In my opinion, it's a really great indicator. It's really worth it. And by the way, I'm making this video on a free version of TradingView, which normally allows you to have only 2 indicators. Okay, so I have the Surge Flux A and Surge Flux B. I have all the indicators I need here. I have the EMAs, I have the Bollinger Bands, I have the buy-sell signals, you know, the momentum wave, the RSI, the divergences, and all that jazz. So thank you for watching. I hope this was beneficial for you, and I'll see you in the next video.